Good evening and welcome to our program tonight. We're going to be talking about Canadians getting mortgages in the US. And we have two special guests tonight. We have Mataya Reid. Mataya is a mortgage specialist. She specializes in investment mortgages and divorce and life insurance and wealth management. And we have Cameron Mackie. Cameron is a 19-year veteran of mortgages in both Canada and the US. He has 10 offices, eight in Canada and two in the US. So for right now, I'll turn the floor over to Mataya and you guys can take it over.
Thank you very much. Yeah, I just wanted to start out by maybe explaining how I got into the US market. And it was basically through divorce because a lot of the couples that were moving up, they were healthcare workers and they were having to come up on their own. And so their spouses were down in the US. So in order for them to qualify, because in Canada you have to qualify for a certain amount of debt, you're allowed your income, your credit score, there's all kinds of things taken into consideration. So the spouses down in the US and the houses that they had down in the US, there was too much debt for them, so they had to do a quit claim, which was no big deal down in the US, but in Canada, we it's not that simple. So if you're going to do a release because of dower rights, in Canada, if you're going to remove yourself from title and remove yourself from the mortgage, it's two different processes. So from there, I just started to help advise couples on how to do that process. And then from there, I just started establishing the fact that when they came up, a lot of Americans were not familiar with our process. When you come here and you want a mortgage, you have to go through the process of creating credit because that's all part of your mortgage process. So some lenders will have a credit score that you have to have. They'll go through your credit report. They'll look at all the history. So when they first come up, they need help setting up their credit. Um, they also need help with their work permits in some situations. And so basically, the system I created was there's a discovery process because each case was case by case. So setting them up, figuring it out what exactly their situation was, and then from there, helping them with their documents. So the second meeting I would have that I found was absolutely necessary was to go through the document process. And in that way, I could explain the differences with their tax forms. You can jointly do taxes in the US, it's quite common, but in Canada, that's not exactly the case. So explaining all of their documents, it was just a really good way of welcoming them into the country. And because your spouse lives in another country and you're coming up to Canada, it doesn't necessarily make you a non-resident. So there's all kinds of different definitions and it can be very confusing. And there's also regions. So basically, I just started creating a system where you would educate them and they would also, from there, they would be able to bring their spouses up, bring their families up, and because without it, it was very, very difficult on them. Going the other way is completely different. It's a lot easier. And I think the mortgages are set up much differently. Ours act on terms. And we have something in the Interest Act where after 5 years, you can't be penalized the way that you were on your first 5 years of a term. So if your mortgage is over 5 years, then the penalty can only be 3 months. So helping clients understand the partially amortized mortgage and how it came into effect. Um, that also has to do with Canadian insurance. Like insurance here is quite a big deal. We have the CMHC that was created by the government, and those rates And the rate that you have on your mortgage is determined by your insurance. So if you purchase the insurance, then you're getting cheaper rates than if you're with a lender. If you're to put 20% down, for example, then the lender pays the insurance. So those are different rates, and everybody loves to rate shop. So, um, yeah, explaining the different rates, why there are those rates, and then doing the shopping for them. It's quite a learning process for them, but going the other direction down into the US, sometimes you're going to need a Canadian broker to help them get the equity out and to have the down payment if they want to buy down in the US. So I met Cameron through the mortgage group. We're both part of the same brokerage, and I saw his presentation. I thought it was excellent. And he looks after the other side of things. So, yeah, take it away.
Perfect. Okay, good. Yeah, I'll go through the details of how you can take funds out of your property. And of course, maybe they'll come back to you, Mataya. And
Hmm.
uh, I'm gonna share my screen, get my presentation up and running. Just bear with me for a second here. There we go. Do you guys see the sign? U.S. financing? Okay. And do you see my cursor when I'm moving it? Give you
Yeah.
thumbs up. We're good? Okay. I'll kind of direct you where I'm looking, how I'm presenting through it the way. So yeah, I've again, Cameron Mackie. I've gone through. I do have 8 offices in southwestern Ontario. Decided to say, you know what, I'll take the hit. I'll come down. I actually live in Naples, Florida now, and we do cater everything to foreign nationals like Canadians. So it's not just Canadians, but it's anybody outside of Canada, or sorry, outside of the U.S. that we have this financing program for, except if they're on a we can't do mortgages for like in Iran, so to say. But all in all, it's a program that we decided to build with just a foreigner that's an investor or wanting a second home. Keeping that in mind, and again, I'll go through all the details through the next couple slides. Kind of understand where we got to and how we got to this program, and then I'll go through the details of the program itself. So similar to what Rob was just saying at the beginning, I did start in 2017. We came down to the U.S. We do have 2 offices in southern Florida. We are expanding across the U.S. And mind you, we do service across the U.S. It's not just with Florida. We started here only because the majority of foreign nationals purchase in this state. But we have closings actually right now happening in Hawaii. We have New Jersey, New York, Indiana, a lot in Florida. So it's all over the U.S. It doesn't mean that if I'm talking about Florida, which I will be in a bit, it's only because the numbers are definitely in their favor of the naysayers and what's going on especially with what's in the news. I find that. So I'll go through current trends of exactly what I was saying. Like you do hear it in the news saying people are not going to the U.S. Stay away from it, or it's dangerous, or whatever it be in it. I'll dabble on some of those figures for you guys, and then I will go through the actual foreign national DSCR product. If you guys are investors, or if you have a group that may be interested in investing in the U.S., that definitely it's an eye opener compared to if you're used to investing in the US. It's much harder. And I will show a comparison, like side by side comparison, just to show you kind of the differences between both countries. And then again, real life examples, what we've closed in the last little while, and we'll kind of go from there. So just started out. This is land border crossings. I know that again, I was up in, I was just skiing in Collingwood only 2-3 weeks ago for the end of the year. I took my family up there, and yeah, you jump online. The news still has a lot of the scare of not many people are traveling and everything. But as you can see, year over year, because of what was saying with the Trump and tariffs and the scares and all that stuff, not much has changed. If you see year over year, there's not a drastic difference. If you look at the COVID year, that would be down at the very bottom of these graphs. So it's not that drastic in comparison year over year. And I'm hoping to see that the next quarter. I do review these stats every quarter. These stats are actually from land border crossings and airport pre-clearance, and this is only from Canada coming into the US. So you can see it's specific to the Canadian side of things. And again, I'll go into a little bit more detail, but ultimately, I don't want to spend too much time on this, but ultimately, we have factored in a lot of statistics to find that the main factor of the reason why everybody's saying they're not going to the US has nothing to do with tariffs. It has nothing to do with basically they want to put their elbows up or any of that nature. It has everything to do with they're on fixed income. They're having a really hard time finding it, like affording Canadian life, and of course they're retired and they're losing 35 cents on the dollar, and that's exactly where it would turn to. The interested parties would be more on the side of investors. They want to leverage, so you put down 20-30% on a property in the US, and again I'll show you the differences in what you can get with that, and the investment opportunities you would have in the US in comparison to the Canadian side. So this is again a little bit more of detail between this is again land border. This is Canada and Mexico. So the bottom one is Canada. You can really see there's a huge difference in crossings. There's many more people crossing in Mexico, not jumping the fence. That's the joke on this one, but just to keep it understandable that the line is consistent year over year. Clearly pre 2022, that's COVID. That's, you got to take that figure out, but that massive dip there. But everything else has stayed pretty steady, and there's only about a 15% difference of the Canadians not coming down. And again, we've done the reports, and we do factor in from wealthy to fully retired and fixed income. And that 15% really comes down to the retired and on fixed income. They can't afford to be down in the US. And that was the major drop off in the last year. And it does come, yeah, the 35 cents on the dollar figure. So looking at this slide, you're looking at the largest contributor to foreign buyers is China. It actually has been for many years, but it was actually last year, Canada was the highest in transactions. So we did kick ass, but unfortunately this year, Canada lost to China. So they're the largest in transactions this last year and in volume. So it's interesting to see that there's all the problems that you have with Trump and saying being like really restricting the Chinese market and all that stuff, but they clobbered every other purchaser in that field, just because maybe they knew it was going to go on, and they know that the U.S. economy may have a chance of actually sticking out and doing much better than many others around the world. So just guessing. Yeah, I love stats. I love looking the stuff up. And hopefully, and again, if you want to look at this, I believe Rob he's going to have this posted so you can review this in the future. Now jumping into, so that was all of the US. Now I'm kind of going to narrow it down to Florida because we have offices in Florida. I know all the stats that come in, and just kind of an understanding of you as an investor purchasing something in maybe Florida. I believe it's 23% of all foreign national purchases are actually in the state of Florida. 23%. It's a huge amount. And of course, out of that 23%, there's a couple other slides I'll show you. It's a large number of Canadians. So yeah, looking at the stats year over year, the reason why I actually put the slide in is you can see down at the bottom here, if you guys are all from Ontario, you remember, I believe it was the premier is Doug Ford saying no one's going to Florida. And it is true. From Canada, there is a 15% drop. As you can see, average is 15%. But what has changed though over this last year and a bit, is actually overseas, or anybody like Europe, in South America. And we have a large influx of foreigners. Like I was saying, it's not just Canadian investors, it's people from all around the world we do this program for. So that has taken off. So overall, though, you can see it's down at the bottom here. It's still steady. Like there's not a drastic change. Canada hasn't really factored that in. So what I'm saying is not saying anything bad about Canada. What I'm saying is the investors that are looking at continuing to invest, they look at this as, wait a minute, okay, so one country dipped, but then others have had interest. So it does, this has been happening for decades. So that hasn't changed anything. So ultimately, the markets are still continue to be strong. Okay. And the reason why, again, that we came down to the US and opened up a brokerage just after COVID, we had to open up the actual mortgage brokerage itself, because pre-COVID, it was snowbirds. They're retirees. And you can see down here, I actually have it here, 47% of buyers, they want to purchase all in cash. Those are generally snowbirds. Those who are investors, they're the ones that want to leverage. And this is exactly what this program does. It helps you buy multiple properties rather than just one. And there's huge tax savings in that too. So it's a 56 billion a year for foreign buyer purchases, which 11% of this out of the 56 billion, 11% are Canadians, and 78,000 purchases across the entire U.S. is actually 1.9% are purchases for foreign buyers. So as you can see, it's less than 2%. It's not on the radar right now. With let's hope that it stays that way for the government to put any restrictions. Where if you looked in the Canadian side, there was a huge impact with there's a large number with foreign buyers, and that's why they put the restriction on, because it was causing an issue with markets and values going up. So that being said, as is jumping down to the 47% of buyers that are purchasing on all cash, pre-COVID, that number was actually 93% of buyers were purchasing in all cash. So there's a drastic difference. And the reason why is because, yes, the values did go up, but the demographic changed. So we used to have a consulting firm that was for snowbirds, specifically built for immigration, taxes, and financing for snowbirds. That's had to switch. And that's why we opened up the brokerage, because we're like, you know what? Everybody wants a loan, and we got to streamline this. So start to finish, we have people that will like we have foreign national accountants, we have immigration lawyers, and like we've actually branched out. We've gotten a lot larger, and it's because the demand and our volume, our business has literally doubled every single year since COVID. So it's done very well, and it's because the word's always gotten out. And we make it a lot easier for foreigners to purchase. That definitely helps. So 55% on average is the loan to value on average for purchasing, which is about 16 billion in annual mortgage volume that the industry is. So it's a fair size niche market. So and as I was saying, 21% of purchases are actually in Florida for foreign buyers. So it seems to be quite the place to be for foreign buyers. So and again, I will, over time, after this section, I'll go into real life scenarios, which again, I will show you some of the properties we've done from all across the US, but also go into the details of what you can get for rental income and the differences, what you would see in, I have one mock-up from what we've done up in the Canadian space too. And just in case, if you guys want, there's not too many people on the call. So if you'd like to, if you like, you don't have to put your hand up. You can just actually talk. If you got a question, drill it out. I'm good with it. I got off a call with, there was about 280 people, and I couldn't continue taking questions, so I had to hold them to the end. But in your case, let's make it a little bit more like personal. If you've got a quick question, let's just nail it down, and we'll keep drilling through it. I don't have too many more slides anyway, so it won't take too much more time. So why Canadians are investing in the US? The majority of you, if I believe you're from Ontario, so you're totally going to get this. So there is less initial capital to invest. There are less restrictions on mortgage guidelines, which again, I'll show you in a couple minutes. And many states are landlord and business friendly. So faster evictions, which I'm sure if you guys are investors already in Canada real estate, if you hear the tribunal or anything to do with trying to kick out a tenant. I used to own a lot of rental properties up in Canada, in Ontario specifically, and I got out of it because of how stressful it was dealing with the tribunal. So I've yeah, I've been on both sides of the fence. So this is exactly why this is more of a market and favorable to me. I do have actually one of the pictures I will show you is a property that we have on the street, and I'll tell you more about it, how much money we make. I truly not just my clients, I'm doing this myself. So in again back in the bottom one here, so no rent control. So annual, I can increase in my annual rent in my Florida properties. I can increase the rent. There's nothing restricting me. Once that lease expires, if the rent on the average rent went up an extra $1,000 because that's the market. However, if it's a good, you don't want to you don't want to make them forced to get out. That's up to you if you want to increase it to what's going on in the market, or you can increase it whatever amount you wish. Okay, so it's flexible, which is great. It's not a restriction of like, oh, you can only raise it 3.125% per year, and it doesn't even budge with inflation. It doesn't do anything. It's Ontario was so hard for that. That's literally one reason why I got out of it. But accelerated depreciation. Any of you guys are tax? You maybe you're all into saving with taxes. Maybe you're an accountant yourself by trade, whatever it be. But you can do a large amount of depreciation on that property, carry it over year, even though you've written everything off on that property. You can depreciate into the negative, which is amazing. And you can carry it over until you decide to sell. So you can have literally a $100,000 loss on a property that's gone up $100,000, and you don't have to pay much or anything in taxes on the gain. So states with high rental income. The nice one is in Florida, you do have the high seasonal rents, depending on where you're buying specifically. And then no state income tax, but you guys won't be working there, you'll be investing. But that is an incentive for a lot of people to continue moving to Florida. One of which actually at the end of this year in November, they're trying to get rid of property taxes. So, and that's only clearly that's not going to be on Canadians investors or anybody investing. It's going to be on homestead, like your primary residence. So if you live and work in the U.S. or sorry, in the state itself, like the state of Florida, they're looking to actually get rid of that tax. And some of you might say, "Oh, well, it doesn't matter to me." Well, actually, it does. If you buy that property and if you bought now, and then they started doing this where they abolished the property taxes for people who live and work like on their primary residence. Well, what is it going to do? Everyone's going to flood to the state, which is also going to push your values up significantly. So that it does help. So this is probably one of the most important slides of the entire presentation. It does go over the program in kind of high level. And again, if you have questions, drill them to me. Love to hear it. So you can do as little as 20% down on this product. I can use short and long-term rents to qualify, which is phenomenal. You can't usually do short-term rents in Canada. There's only a couple lenders that actually allow it, but then they have severe restrictions on it. I can use 100% of the rent. It's debt servicing. It's a 1-to-1 ratio is what the lender wants to see. If you want to do less than 35% down. Let's say I do actually have a property right now in Hawaii. This one is it's a condotel. only to find out that in the island of Maui, they're trying to get rid of condo hotels. So there's a bill, I think it's Bill 9 is what it's called. And so I can't use short-term rents, but the condo itself is not allowing long-term rents. So there's a problem there. But the client definitely wants to buy this property because the short-term rental ban doesn't happen for another 3 years. And they want to do something with the property regardless. And they're like, I have to buy this, Cameron. What can I do? So I said, put another 5% down. So now they're at 35%. They were just going to do 30 before that. And then it becomes a no ratio. I literally can go to a zero on rental income. And I got this thing approved. It actually closes in, I think, a week and a half. So they're happy. They got the property. They had to put another 5% down. No problems. So, but just to mention, like down in the bottom corner, it says here, lower the LTV, so lower the loan to value, the higher the rents, you get better rates. Okay. Interest only is one option you can do to help qualify, or a 40-year amortization. However, most of the mortgages we qualify on a 30-year amortization. Okay. No maximum units. No maximum unit or doors in your portfolio. I have a client that is, most of these properties are in Orlando, but he has 54 properties with this program. Okay. Many lenders will accept maximum 5 within their own hub, their own lending facility. But I have, like, I can go to hundreds of these lenders. We only deal with 18 right now because we trust them, because this is all that we do, are foreign national loans. So we know everything start to finish. We don't do all these standard loans with your owner occupied in the US, like your citizen. We just focus specifically on this program because it is tough. It's tough unless you know what to do. So maximum units is 24 in one building. So any of you investors that are, usually we find this further north, that's like Ohio, New York, they seem to like the larger units, 10, 15 units, no problem, all day long. No difference in the program in itself. It just has to ultimately debt service. There can't be major issues with the property, like a slumlord kind of thing. It's about to burn down kind of thing. It's got to be a habitable, decent property. Here's the key point for you guys, Canadians. You're always thinking, oh, I don't have credit in the US, or I write everything off. I have nothing showing on my tax returns in Canada. Perfect. I don't need it. I don't need your credit. I don't need personal income, which is phenomenal. I look just at the property. If you have credit in the US, maybe you're already established. Perfect. If you have, then I actually get a decrease in the interest rate. There's not much of a decrease. But if let's say you're a US citizen with this program, if you have good credit compared to a Canadian, there might be at most a 0.25% difference in the interest rate. It's not a drastic change. So this program in itself is phenomenal. Now, this is another thing where I was saying, Mataya, if you guys need, maybe you have a large amount of assets in Canada, but you want to start building a portfolio in the US. This is the nice thing. I can use secured debt. So you can go back to Mataya, you can refinance the property, and then we can buy the property in the US. And I do not have to include that debt that you took out with Mataya. I don't have to include it in the funding ratios. So it's phenomenal. It's as if it came from anywhere. I just have to show where it came from. Clearly, it's for any money laundering laws and all that stuff. And it has to be attached to an asset. In order to work. It can't be unsecured debt. Okay. So here's the thing: side-by-side comparison. I don't know how well you guys know the Canadian market. I am a broker in Canada, so I know both sides of the border. And for sure, this is also why we open up and branched out to the US, is because this kind of, you get an understanding of how much easier it is to approve clients. Okay, so minimum FICO score or Beacon score is 650 in Canada. I don't need anything in the US. 30 years is generally the max. I can do 40 years or interest only in the US. It's actually 20, the down payment is 20 and 28. So I do find that the majority of clients don't get anything under 20%. It seems not to debt service. But lenders do actually they advertise as little as 20% down, but seldom do I ever see that. I've only ever seen that option one time when it was a duplex in um, in New York. So it debt service phenomenally. It is very low purchase price. So I have I think that one in this a couple and two more slides as an example. So you'll see that in a second. So down payment source, you're not supposed to do gifts in Canada, and debt has to be added to the ratios. So if you do debt from any other source, it has to be put into the funding ratios. And I'm allowed gifts in the US, and debts are not in the ratios. So that's a huge difference. Personal income is required in Canada, not in the US. Rental income is generally 50% in rental income in Canada, where I can use 100%. Short-term rents, it's generally only long-term rents in Canada. They do have some programs that allow short-term, but there's heavy restrictions on it. But of course, in the US, I can do both. I do have debt servicing calculations because they're using your personal income. It's a 3944, like total debt service and gross debt servicing, where scrap that in the US, they look just at the rent. So rental income and then rental expenses. That's how you're going to get your rent one-to-one, $1,000 income, $2,000 expenses. That's your one-to-one, easy. Maximum units is 4 generally with most lenders, where it's 24 in the US on one property. And units in your portfolio is generally maximum 8, and then they want to see it as a true commercial loan after that. But then U.S. Property is there's no maximum, so you can carry on this product until you literally have no lenders to fund with, which is not possible in the U.S. because it just isn't. So there's a lot of lenders and a lot of possibilities. You just have to find the correct ones or the best ones to work with. So you can do personal name, some corporation, how you can register in the US. You can do personal corp, LLC, holdco, partnership. Okay. Yeah, so there's a lot of different options, as you can see. Does anybody have any questions so far? Anything? No, I'll keep going. Okay. So real life examples, we'll jump into these. And you're looking at these three. So the one obviously all the way on the left is Milton, Ontario. Hopefully you guys know where that is. And if you do, if you're living up there right now, I guess you're pretty cold because it's I heard there's a huge snowstorm. So I feel for you. However, I'm in Naples, Florida right now, and I'm still wearing a hoodie because I'm cold down here, but I shouldn't complain. Purchase price, this is actually a real client of ours in Canada, bought this property from a builder, new build, put 25% down. Actually had to put more down because the value came in lower, but I didn't even factor that in. But 1,200, it was only 1,200 square feet. It was, I think it was, yeah, it was 1,200. Okay, unit was, I think it was under 1,200 actually. That might be a typo. I apologize. I don't think it was that high. I think it was around 800 square feet. But anyways, it doesn't matter. Property is not managed. The rental income on that property was only $2,200. They were losing $70 a month. Now, this is not saying 50% of the rents or anything like we're looking at with as if you're looking at it through the glasses of a lender. This is the investor side. So you guys, this is using that 2,200 as 100% of that income. They're still losing $70 a month because there were condo fees and everything. So they didn't debt service as well. The one in the middle is actually, I do have a rental property on the same street. I used this mock-up well before we actually purchased in here. So the reason why we purchased in here is exactly what I'm about to say. So purchase price was $524,000. So it's less than that little Milton property. I had 25% down. There's 1,900 square feet. The one that we purchased was actually 2,100 square feet. It's pretty much exactly the same almost. It's one unit, three bedroom plus den. And vaulted ceiling, beautiful. It has bocce ball, it has tennis courts, it has two different pools, like one's at the clubhouse with a gym and everything. And the rental income on this property, it ends up being like I think $500 a month for all of the amenities on this in this entire community. and it's managed by a property manager, and the rental income on it is 6,500 short-term rents, and it goes almost 6 months of the year. We listed this in November, and within 3 weeks, we had the entire winter from December 1st all the way until April 1st at 6,500 bucks. We're renting it out now. I believe it's 4,500 for the lower season, the slow season. However, that already is starting to get rented out. Only because what happens is Canadians, or let's say that those who live in the northern states, they leave in April. We know that. Hey, snowbird time is out. They leave the state. But remember the couple slides back, I was showing you guys overseas, that huge growth. That growth um, has really pushed foreigners to come in, and they love the heat. They come, actually, like Germans are huge. If you're, because I'm living in Naples, I see that the influx, the snowbirds are gone, and then the Europeans, they seem to vacation, not just Germans, but I'm just using that as an example. They come in and they rent, and multiple. We have a lot of clients that have had rental property, short-term rental properties, and they say, yeah, the Europeans come in as soon as the heat comes, and all the snowbirds, they leave because they don't like the heat. So now you have a large amount of options for people renting. Okay, prior to COVID, snowbirds came in, and it became desolate. And I lived here prior to COVID in 2017. I basically I moved down here. There's a huge difference. Now it's busy all year round. So you have a market there, which is different. Now, kind of not looking at Florida, let's look further north. I've got Rochester, New York. This is that one I was saying, the duplex. 310,000 is a purchase. This might be some of you guys that are interested in being closer to the property, so you can actually go there and see the property if there's a problem, whatever it be. This is 2,800 square feet with the 2 units. And out of the 2 units, I literally fell on the floor when my client brought this to me. I was like, you got to be kidding me. It's 1,700 one unit, 1,750 in the other. They were net cash flowing 1,200 bucks a month. They could have put only 20% down on this, but they decided to, because what they wanted the cash flow. They're going to do this about 6 times over. And then, of course, there's the retirement income. They're just going to roll that in. And of course, it's in USD. They originally came to me, one of my agents up in Canada said, Cameron, I can't get them approved anywhere with doing this any rental income. And they were looking to purchase something about $900,000. So then they got in touch with me, and then this opened their eyes. This is a mass amount of cash flow, and this is actually a really nice property too. I couldn't believe it. So that's just one example. And here's a couple other ones all the way to the left. Literally, I think I've covered the.
Can I just interject here for a second?
Sure.
So that first one that you showed in Canada,
Yep.
an apartment building, strata fees,
Pardon me?
a strata fees on that first one
Yes.
doesn't seem like so it could be even less. Like if they increased your strata fees, which they can do, there's no ceiling on it.
Mhm.
Um, that cash flow would be even less.
Oh yeah. Yeah,
Yeah.
absolutely. The other
And
one,
they
the
could
one
also
in the
say
middle
no
could
to
be the
short-term
same.
rentals as well, probably.
Yeah, so the one in the middle, you're talking about
I'm
the
talking
one on
about
the
the
left
first
here,
one,
the
comparing the
Milton.
Canadian one. Like
Yeah,
that number is pretty good compared to the fact that as an investor, if they increased your strata fees, which they can do, right? It's not like taxes that are going up a certain amount every year. That net cash flow would be even less. And
yeah,
it's out of your control.
And in fact, it's probably would be quite a bit less, because if you look at that, if it's 25% down, that means you got a $600,000 mortgage on there.
Yep.
So your $600,000 mortgage plus your taxes plus your insurance plus your condo fees, that poor landlord is not doing very well.
yeah. That's what I'm saying. What ended up happening is they ended up having to put more money down that was the builder sale price, but the appraisal came in different. So their
Yes.
true mortgage was a lot lower, but those were just the actual final figures of the loan or the rental income. So I do believe the net cash flow should have been probably lower than that, but
Mhm.
um, that was back a couple of years back. So yeah, I'm positive
It's
that
just that as an
recovered.
investor, there's a lot of things in that are out of your control,
Yeah.
right?
Well, so I should say, just to be fair, same with the center one, like the Naples, Florida one. Because I own on that street as well, so I know like they could do a special assessment, any of that nature. It's like those are kind of the things that you're up against. But at
Mhm.
the end of the day, I've got some playroom of as this one is showing $517 a month. So you're
Mhm.
sitting at an extra 6 grand. You just hope, yeah, there's not a hurricane or major changes. That's the part of the investment, right?
Mhm.
Now, this is at 25% down. If you want to put a lot more money down, which most of our investors are 30, 35, they find that's their comfort zone. They also get a much better interest rate too. So you can, yeah, you can maneuver things. It works. There's a lot more flexibility, and especially if you have, mind you, like the Milton property at 800,000 for this kind of shoebox in the sky. Um, you jump into something in the US, you almost have half the amount for the purchase price. So your down payment ultimately, yeah, you might put 30% down, but your down payment is based on 500,000, not 800,000, or even look at Rochester, 300,000, not 800,000. I just think it's astronomical what's going on with the
Mhm.
prices up in Canada. So just yeah, on the did you have any other questions before I just is like little I think that's the last slide anyways. We're pretty much there, but anything else? We're good? Okay. So on the left side was a Hawaii property we closed. That was last year. Investor, he was very well-to-do investor. He could easily pay this property out in cash, but he says, Cam, I want to put down as much as little as possible, but something around 50%. So I was like, okay, fine. So we ended up putting, I believe it was 3 million in by the time we're done, 3.4 million or something like that, with the closing fees, taxes, and everything. And ends up being so 4,100 square feet. I received an appraisal on the property, long-term rents at 30,000 a month. And so it cash flowed $5,400, and he uses it once in a while. But if not, it's rented to a property management company. So that was it. It actually was, believe it or not, he used crypto for the down payment. This is probably one of the worst deals I think I've had, but I got it done because you can't prove where the income's coming with crypto. And believe me, we've seen everything under the sun, so we were able to get this one completed. The one in the middle is actually back to Florida. There was a person, very well-to-do Canadian, that he owned their four properties side by side. He used his own capital to purchase the land, and he built these properties brand new. And then he turned around and rented one out, and then he rented another, and he's going to rent. There's two others he still has to do. So he did a cash out on the first one. I gave him $500,000 on the first one, and he's like, "You got to be kidding me! You can just all I had to do is sign something saying it's for other investments." Like in Canada, if you do anything above about 250, 200,000 and around there, they want to self-direct it, and they want to know where it's going. And so it's literally like you're being babysat. The problem that you have though is if you turn around and say it's for another property, what do they want to do? They want to know, okay, how much is that property? What's the expenses? I got to put that into the funding ratios too. Believe me, I've
Mhm.
dealt
Me
with
too.
that before. It's horrible. So you really restrict, you're hogtied with your own money, to get it out to reinvest it. So yeah, now we went to the second property. This is actually the second one, and I got him 564,000, and minus like closing fees and everything. But he was extremely happy. That's why he came back. But now he has two. He took out the two properties. He's got $1 million, and he's already building at three others. It's in Marco Island. So he's doing very well. Yeah, he's rolling it, rolling and rolling. So it opens up your mind as a Canadian investor. You're not restricted. You have the potential of doing this again. Like I said, after COVID, it became investors. They don't like to leverage, and this is exactly why we have this program. The last one was at Tennessee, very simple, 415,000. He was happy with 30% down. Rental income and cash flowed with $215 a month. So it was pretty good. That was an easy one, very simple, and it's not property managed. He actually is he's moving down so he's going to be close to it. So he didn't want to have it property managed. But anyways, yeah, that is the end of it. If you guys want, in the bottom right hand corner is the Foreign National Program. It goes to our website, which goes through the program a little bit more in detail, and it has all the questions and FAQs there. But ultimately, you can also go to the contact us page and reach out to us if you've got questions. So any other questions?
Well, I don't want to put you on the spot. I have some questions about closing costs, like our property transfer tax here in Canada. Do they have the same thing down in the US?
Yes, they do. But what happens is it's not a mass amount on when you close the property. The property has standard your title fees, title insurance, like minor. It's not that bad. You do
Mhm.
have what's called tax stamps. So the problem that you have in comparison from Canada to the US is that Canada's expensive one-time shot. Okay. The US, the taxes or the tax stamps are lower than what you would pay with a land transfer tax. But the every time if you were to refinance the mortgage, there's a tax stamp, and it can usually it's about 1 or 2% of the mortgage amount. It could be in and around there. Um, so yeah, that's roughly
Okay.
the fees. So you don't when you actually close the fund the money, you don't want to have it as like a real short term 1 year, and then you want to get out and then move, right? You want to be able to stay at least for 5 years, let some wealth build, and at that point, yeah, do the refinance structure. And there we can get discounts though internally if it's just a let's say you went 3, 4, 5 years, but you don't want to pull money out, then you do what's called the rate and term refinance, and there are deductions with that, which is good. So some lenders actually give like funds back as credits to help towards closing.
Hmm. Very good presentation. Good
Any
information.
question? Any questions, guys? I can vouch for the process because I can tell you that I got my properties in Phoenix refinanced in 2021, and I was able to pull out almost $870,000 in just as a cash out refinance to be able to go into other investments. And the
Mhm.
lenders down there are really flexible. Um, they did not. They all that they cared is that I had a debt coverage ratio of 1.15. That's what they wanted in debt service. And they were prepared to go 65, 70%. And the other key thing is that they give you 30-year money. When they quote you that interest rate, that's 30-year money. It's not like in Canada. In the States, the term and the amortization is often the same thing. So when you're signing up for a 30-year mortgage at 4.1625%, you're getting that 4.6125% for 30 years. So you're not having to go back in 5 years and worry about what the interest rates have done in that time. So I can tell you that there are a lot of really interesting differences between Canada and the US that have made it really profitable for me.
So I know in Canada, the reason why they did it was the 60s and 70s, and it was to even out the playing field for the lenders. So they made the partially amortized mortgage, right? And then nobody ever mentions the 5-year rule, right? But it's all there. But I think a lot of it just comes down to the legalities, and the power that the government has in Canada is different than the limited powers that they have down in the States. Here, I love how you said it feels like you're being babysat. It's exactly what it feels like. They get
Yeah.
into every corner of your life, uh, and people feel violated when they go for a mortgage in Canada. They do,
So
right?
most of my agents in the US, when I'm training them and I tell them that there are 5 year terms in Canada, they're like, you mean like there's a 5 year like cancellation fee? No, it's the term is 5 years, so it resets itself. And they're like, get out. That is such a ripoff because you cannot. What happens if the rate skyrockets, which is exactly what's going on? 2026, there's a large influx, or there's a large amount of renewals in it. It's going to really hurt Canadians. So, which also puts a bit of a cloud over the economy because a lot of it has to do with real estate, and then of course for affordability. And when people can't afford anything, then they stop buying, and so there's a yeah there's an effect over. I think this year in itself we're going to see a big change. However, those who are looking to invest, the number one thing I just to jump back on that one slide where I was showing you that China was one of the largest purchasers. I honestly think like they see things coming from a mile away, and they knew with Trump coming in, all of a sudden they're not only the largest purchaser, which they were several years over, but they're also the largest in transactions. So they probably see that, hey, you know what? Let's invest into the U.S. because that's a market that this president could change. It could completely annihilate and collapse everything, but on like from what we see right now, as much as he's bullheaded, and yes, I don't want to get into the political aspect of it, he always seems to make things better. It's with real estate. It's always pretty solid with what he's ever done, clearly because what he's done in his past with real estate. So it's something to to not look away from is why did China, even though they have kind of they butt heads all the time, why is it that they are investing more into the country in which the president is trying to restrict or ban them from entirely, right? So it's interesting to see that aspect of things.
I'd be interested to know the difference because we have fee simple, freehold, the rates that we buy when we're buying land, the difference between those rates in the US and in Canada. What
Okay,
is fee simple? Like are you buying a property on leasehold? Are you buying it fee simple? So the difference between what those rights actually are that you're buying.
but usually fee simple is fee simple. I don't. It's not. They don't. Yeah, it's not leased at all. Like if that's what you're saying, or you're maybe a
Yeah, I'm
condo.
saying when you're doing fee simple in the States, are the rights that you're buying the same rights that you would have if you buy land in Canada? Yeah, it's going to be fee
Yeah,
simple, but are they the same? Like, how is it written out?
I've never even looked into that. That's a good question, but
Because
I
if you
would
bought certain rights, it doesn't matter really where you've come from. You bought a certain amount of rights and the freedom to do what you
right.
want with your property.
Yeah. Well, they can't just take it from you if that's the case.
Yeah,
That's why they have heavy restrictions with Chinese, actually in the state of Florida specifically, where they can't buy too close to an air base. They can't buy too close to specific government buildings. Uh, so they put the restrictions on, but they can't kick them out once they own it.
yeah.
Um, I just the one thing America's always done is it seems to be more for the people. Like it's interesting that a lot of Canadians, when I first came down to live in Florida, everyone seemed to be worried about like, oh, you're gonna they carry guns and all that stuff. And I'm like, you know what? I feel safer in where I am now compared to like people with no gun rights in Canada. Like my old neighbors, they like I still see them every time I go up to Canada, and they're like, yeah, we have to lock our doors down, and it's just weird. It's changed, but Americans are very gun ho. Go figure, no pun, but it seems to be they they won't allow certain things to happen, and yeah, I don't think there's you can just easily take away ownership of a property. For sure, there'd be an upheaval on that one, but again, against a foreigner. I've never heard that. So it's good. I'll look into that. I'll find out.
Another
Can
thing
I
that I
ask
can
a quick
tell you
question?
guys is that, yeah, go ahead, Fred.
So I'm trying to understand, like, what are the tax
Sorry.
implications or like legal implications of investing in US? Like, if
Oh,
Oh,
did you lose
where'd he
him?
go? Looks like he lost his connection because he's no longer on the participant list. I'll watch
Was
for him
that
coming back in.
is that Paul or is that
No,
no?
no,
That's
no, that
Reid.
was
That was a good question too.
well,
Sorry,
one thing that I can tell you guys is that one of the reasons that I got invested in the States is that um, the rents relative to the cost per unit were much better. So if you look at your cost per unit and the rent that you can command for it, you can do much better in the U.S. than in Canada. Um, for example, I get between $1,000 and $1,100 a month for my condos in Phoenix. They're 1 and 2 bedrooms. Okay. Now that doesn't sound like a lot when you look here and the rents are going to be 2,000, they're going to be 2,400. Okay. But when you looked at in Phoenix, you can buy that condo for about 130, 140,000. Okay. That's $1,000 rent on $130,000 property. That's way different than you would get it here. So, and that's how I ended up starting to invest in the States, is that when I started looking at the rent to unit cost ratio, it just made sense. I was able to get things to cash flow positive much more easily in the US than in Canada.
yeah, 100%. That's I agree with that. And I do have I've actually taught another class on um, like beware of the amount that you do purchase. And there's a lot of guys that call me saying, I want to invest in the US and I want to buy this property that's like 65 grand or 80 grand. And I've gone into details with showing the differences. Like I do imaginary line like crossing the tracks. Okay, so in one town, you have one property on one side of the tracks of $65,000. Across the tracks, it's 180,000, only because maybe the area wherever it be. And that does actually, you have to be careful about that where you do buy in the US, because yeah, you could be buying into a really bad area. So a little bit of research, you can do all that online now, but looking at the property though, that the point I was trying to make is that that's exact same house, one's 65,000 and one is 180,000. You're thinking, I'm just going to get 65,000 because yeah, it might make more sense cash flow, or that's the amount of money that you have to put towards the property, rather than getting a loan on a property using that 65,000, and now you're leveraging with the loan, okay, with $180,000 property. But here's the difference. So yes, you got a loan, and I can help you with taxes, make sure that it's write-off capabilities and all that, so it makes sense. So you don't actually show much income on your taxes, which is good. So less tax you got to pay. But ultimately, the point of this was, if you looked at a satellite view of that same exact property, one on the other side of the tracks, one's 65, one's 180, and let's say that you have to repair that roof. Well, that person or that company that comes in and gives you a quote based on the exact same roof doesn't say, oh, because you bought your house for 65,000, that it's going to be a third of the cost. No, the cost of those bundles of materials to do the repair is going to be the same, whether it be whatever side of the tracks you go to. Okay. The difference is when you do calculations like a percentage to repair, if you go from I think it was like 30% of the cost to do this one repair, compared to only 7% of the cost of the repair. So therefore you're not out of pocket, or you basically, the person who bought that $65,000 unit would end up going into the negative, or never getting that money back, especially if a kitchen had to be replaced or any of that nature. If there's major repairs and you bought 65,000, you'll never make the money back. So that's the danger zone. And that's also why a lot of lenders in the US have put that restriction of saying that they don't want to, the mortgage amount can't be less than 100,000. A lot of them are like that. Some of them are even creeped up to 150,000 because then they know that 30% roughly added to it. It's about 200,000 of a purchase price. They think that's the sweet spot to make it make sense. And it lowers the risk, and the risk factor is that percentage for repair.
Interesting.
Anybody else have any other questions? I'll just put up.
I had a question. What was the 5-year rule on the mortgages again?
In Canada,
Yes.
the Interest Act, Section 10.
Okay.
So, if you get a 10-year mortgage, anything over 5 years, you're not going to have to pay a penalty. It's say you got a fixed rate on a 6-year, 7-year, all the way up to 10, whatever it might be. Your penalty isn't going to be that IRD. It's only going to be 3 months interest.
Okay.
Okay. But if you renewed and went for another 5-year, then it's not going to continue. That's a brand new contract. So a lot of economic systems in Canada are based on 5 years. So it's no surprise that most lenders want you to go with a 5-year mortgage or less,
Right.
right?
Okay. Yeah.
But when rates were really, really low during COVID, that was probably a really good time to get a 10-year mortgage, right?
Yeah.
Yeah.
Okay. Thanks.
Yeah, Section 10 of the Interest Act.
Okay. Thank you. I did have a question for Cameron. I don't know anything in the States or anything, but for someone looking to possibly get into it, what on my side do I have to do to start? Like aside from, down payment, all that sort of thing, but like legally or corporation wise or anything, what would be the best like starting position or what would you suggest?
So what I generally do is just to keep it simple. I always get an application, then I can review your file, make sure that if everything looks good, I can get you pre-qualification. But at that point, you and I will discuss what structure that you want. If you wanted an LLC, if you wanted it into a C corp or trust, any of that nature. If you want some very complex structure, I actually would get you involved with our FERPTA accountants so that they can structure it properly, so tax wise, okay. But if it's just a simple LLC, then yeah, I can even have them register the LLC. LLCs are actually easy to register, but it's what's called the employment identification number. It's the EIN that's attached to that LLC. That takes a bit of time. So if you're searching for a property, that's the direction you're going to go. I would recommend doing it right away because I actually have one right now. It's supposed to close on Friday, and it was supposed to close 2 weeks ago. The accountant did all the paperwork, sent everything in, and we're like, where's the EIN number? It's not coming. The LLC part comes in fast. The EIN, the registration from the IRS took forever, and it finally came in. And so we had to delay the closing, and having that extra stress, the problem that you might run into if you wait till last minute to do certain things like that, which this client did. He said, no, I want to put it into an LLC after he went into the purchase. He didn't want to before. He wanted just to put in a personal name. So that could have put him at the mercy of the seller to say, oh, you want to delay? Well, it's outside of the contract rules, and I want an extra $5,000. Well, that can cost. So even any tax savings for a while could hurt you for a while, right? So yeah, pre-planning for sure. The structuring, all you have to do an application, it's very simple. You just go to rateplicity.com. So think of simplicity, but it is rateplicity.com. Pretty simple. On the top right corner, it says apply online. It'll take you 10 minutes to do that. Once that information comes into me, it's usually 24 to 40 hours. I deal directly with all my Canadian friends because I speak Canadian. Okay, that's the joke. I know how all about the mortgage rules in Canada, what you guys are used to. And then what will happen is once I do the pre-qualification, I'll review your documentation for down payment. There's other caveats to it, like reserves and all that. I don't have to get into the detail there, but making sure that you qualify for X amount that your comfort zone is. And then I give you that pre-qualification and off you go to the races, and you find a realtor that you want to work with, any of that nature, and whatever state you want to go to, you kind of it's up to you at that point of what you want to do. And then of course I'm your main point of contact. Now, once you have the purchase, I have my team that will take over and submit the purchase and work with the I have a team of processors. They work with the lender. They'll get the conditional approval back. They will start talking with you saying, okay, well, Mike, I need XYZ, and then you'll start sending the information. I come in once in a while just to make sure you're okay, you understand, because I do understand the difference is in the US, they have this way, and it's tunnel vision. Okay, we used to send a lot of Canadian clients to other brokers before we had the brokerage. This is years and years back, like before even 2017. And all of our clients would come back to us extremely frustrated because it's just a different system, right? Put it this way, I can have a file completed fully within 5 business days in Canada, which again, if you guys have owned property, that's the common thing, 5-day condition financing. The financing clause in the US, guess how long it is? Just take a crack. Just throw it out.
An hour?
No, 45 days. Can you imagine waiting 45 days for your approval? Like the approval takes forever. We have to do, so the broker has to do title. The broker has to work with the insurance agent. It's a large amount of paperwork. It's a large amount of time, right? That it takes to get it done. So yeah, we will structure as much as we can, pre-plan, make sure you're ready, right? Ready to go to the races. And then of course, I'm always your main point of contact if something happens.
What was that called again? I can't remember the number, the employment, the EI, whatever number that you need to
EIN.
EIN.
EIN. So employment identification number.
Yeah.
It's equivalent to a BN in Canada.
Right.
It's
Okay.
essentially equivalent to your business number in Canada.
Yeah.
Right. Yeah. Because I've had a couple of colleagues of mine getting it, and that was a process the way they were doing it.
Now, were they doing it personally? Because if you're doing it for personally, then you're looking at an ITIN from Canada.
No, they were
Individual
doing through their
taxpayer.
corporation.
Okay.
Yeah.
Is there
Yeah, you can get
anything in line with immigration that needs to be done for Canadians?
no, you just can't live down there for over 6 months.
Okay.
So there's other things that we could look at too, and I can go into detail. So on my consulting firm, so it's called snowbirdadvice.com. There's actually a form that you can go to for its closer connections. I literally created the app, and it's a calculation on how long you've been in the U.S. because the IRS calculates how long you've been in the U.S. different than Homeland Security. So in the calculation, hopefully you had a tall glass of wine because it's confusing, but that's why I created this calculator. It's pretty simple. You say, how long have you been the current year? Let's say it's 120 days. If how much have you been the previous year? It's you take 1/3 of that time, and then the previous year you take 1/6 of that time. And if it adds up to 181 days, you have to you're considered a U.S. resident. So you have to show them that you're under 181 days or under 180 for sure. If you put it this way, if you're down in the U.S. for over 4 months consecutive every year, 4 months plus 1 day, you actually are supposed to be filling out the closer connections form, the form 8840. So, but it doesn't mean that you're going to get hit with taxes or anything like that. Like those are these little things, and that's exactly why I have a consulting firm on it. It can be confusing, especially with the I-94 stuff that's going on. That was implemented. A lot of the snowbirds are having heyday over that. If you're down for over a month, you got to register the I-94. This stuff has always been around, but they're actually doing something about it now because they're trying to really cut down on immigration or find out who's working from their vacation destination in Florida, which is happening a lot. There's so many of my broker friends that are from Canada. They come down and they're down here 5 months of the year, and they're making a lot of money while down here. But it's up in it's all Canadian based. It's all Canadian mortgages, so
So
it's all taxes.
if you're making rental income down there, uh, does that make you a tax citizen because you're making money from the US?
No, you're still filing your tax return. It's a non-resident tax return. I think it's
1040 NR.
there it is. Yeah, 1040. I believe me, I have to deal with numbers all
He's
day
like, I've done
long.
one.
Thank you.
I've done a couple.
It's yeah, everything is in the US is acronymed, or any of the government files are all numbers. And it just after a while they start to blend, and you don't want to say the wrong one. So there's a whole bunch of other things you can learn too. If you buy one rental property, but you want to sell that one and buy a bigger one, or buy two, you can do a 1031 exchange, and just a whole bunch of other tax structures. And that's actually why it got to the point where it was so daunting that I send a lot of my clients to like a foreign national accountant, like a specialist just for that, because it does get very convoluted after a while, and you don't want to mess up, that's for sure, because getting hit with the IRS, you're going to get in trouble, right?
Yeah, especially since the 1041 or 1031 and exchange is not recognized in Canada. So
Yeah.
if you don't do it properly, you can find yourself paying double taxation.
Right. Right. Rob knows this stuff.
Is there a minimum amount uh for like a down payment that, like, let's say I wanted to get in on property in the US, right? Like what's a like a just ballpark minimum amount that I should have in my mind before I even think about going that route, if that makes any sense?
So if you want to make sure that you move into it, like you get the investment, and it's not like, oh, I missed it by like I lost out by 3% of the loan, right? A loan to value or something. I always say that if you can come up with 30% down on that property, and remember, properties in the US are a lot lower. You say 30% in Canada, you're like, oh, I can never do that if my life depended on it, right? It's really tough in Canada, but in places in the US, you have a chance. So at 30% down, that's the key. And I do say it's best to have about 6% in addition for savings, for closing costs, and making sure that you have enough funds, right? It doesn't mean that you're using all that the additional 6%, but it's just to make sure you've got it. Yeah, that you should be good to go.
Okay.
But you can go as low as 20%.
That's correct. Yeah. Like I was saying, that one property that was in New York, because the purchase price, a duplex at $300,000, making $1,700 a unit, is absolutely insane. I could not believe they found that to begin with. I didn't even know they existed, and they're now on their third property actually. So they find those. They've been renovated, and I just didn't know they existed myself. I was quite interested to look for properties myself and buying, but I'm buying further south. I'm more of the short-term rental. I want to deal with snowbirds. Um, you deal with a spilt glass of wine kind of thing. That's all that the complaint is out of them, right? So it's a different type of tenant. But yeah, the rental income on that one property was astronomical. At debt service, you could do 20% down easily on that one.
And so what determines whether you do 20 or 30%? Like, can you
Yeah.
ask to do 20% if you
Oh,
could?
good question. So let's say, well, maybe the client wants to put down, that's one part, but usually they want to put down the minimum. The minimum would come from I'm going to do an appraisal on the property. So if you remember, I don't do your income. I don't care about your credit. Okay. Don't anything Canadian side, don't want to know about it. You own 100 properties up there, don't want to know about it, which is interesting. I don't understand how the US cannot even want to look at what's going on, but yeah, they look at 30% down would be on the appraisal. They're going to do market rents on that appraisal. So it's called a 1007 in the US. Go figure, it's another number. This be a joke for Rob there. Everything's a number. So a 1007 is long-term rents. You could do 1007 short-term rents. And again, I can use 100%, either, whichever one you pick. And then from there, let's say they take market rents of $1,000 or $10,000. Then you have the Hawaii property is $30,000 a month. So it's whatever is going on in the area. And that's literally how you get your rental income. And I don't need to have it rented out. Okay. And when we close, I don't need signed leases. Like some lenders in Canada want to see a signed lease. They want to see, yeah, they want to draw blood kind of thing, right? So in
Okay, settle down there, okay?
it's so hard. It's so hard, honestly. And did you see what's going
Make
on with
my
the
job
OSFI
sound
rules
terrible.
too? The new OSFI rules that you're not allowed to use like income from another rental link property. Have you heard that? It's pretty bad. So it's interesting. Things are changing, and that's also why, yeah, we do have like the market's still good in Canada. I'm not saying anything bad about it, but just trying to get into it, it's gotten very tough. And for
Yeah.
savvy investors, it's like they don't want to deal with all that. They want to deal with, yeah, problematic tenants or something. But now they're dealing with government regs. It's gotten hard. So
Yeah.
So in 2008, uh, those the whole thing that happened in 2008 was supposed to be because the secondary market, they weren't mortgages that they said they were. But if
mhm.
they're not taking income documents, then how do they know whether those mortgages were good mortgages or bad mortgages? The whole 2008 thing that happened.
Because like if you're well, if they a lot of them are buying these properties saying that they're going to live in them, like owner occupied, or they were owner occupying these properties, like the Ninja mortgages. They weren't
Yep.
investment properties. Investment properties, yeah, they're still tenants, they're still paying rent. Those are standard mortgages. This product's been around for a long time, whether it be a foreign national product or not, like the DSCR loan. But the one that made it all fall apart is like the Ninja mortgage, no income, no job. Um, yeah, that's what it's late. It's getting late here. So it's been a long day. So yeah, just they uh they were literally putting people in saying like they some Canadian, like I know some mortgage agents right now, they're truck drivers, all of a sudden they're making $300,000 a year. It's like you're asking for trouble, right? You're we had stated income back in the day too at that time, if
Yeah.
you
Yeah.
remember. And I remember doing those loans and I was like, you're stating income because you own a business. I wish they still had that. I'd probably have like 50 properties in Canada too. It would be great. But the difference
Well,
is, yeah,
our stated income, you have to give 12 months bank statements, so it's not
yeah,
really true
You have to
stated
have proof of
income.
stated
They're going
income.
through your bank
yeah.
statements. Yeah.
Yeah,
Well,
what happened in 2008, Mataya, was really there was a different process for lending back then in the US. They were lending up to 120% of appraised value in some cases.
Yeah, okay.
And
I can
the
feel
the
that.
difference in the states also between recourse and non-recourse mortgages. So they were lending 120% of the appraised value in a non-recourse situation. So people were walking into the bank and dropping off the keys because the most that the bank could ever get back is the property, and they couldn't go after the borrower for more than the property. So they created a spiraling disaster of lending, where people were over leveraging. They didn't have the equity, and the lender couldn't come after them for the amount that was owing.
Yeah,
So
and from that came all Canada's rules and regulations, and that's when it started to get really bad. And it wasn't even our country. And that wasn't even our process. And we
No,
paid the price for it.
Well,
Right.
you got to think like we ended up with one of the most
Well,
powerful countries on the planet at the time. Like our economy did phenomenal at that point, right? We even had our dollar was at par. We're solid. I was actually quite happy in that day and age, even though yes, the restrictions were there. But when Jim Flaherty was putting them on, everybody was complaining about them. But I was like, did you look at like Greece? Did you look at all these other places around the world? There's
yeah.
people starving on the streets. There's riots. It's bad. So
It was collapsing all over. All economies
yeah,
were collapsing all over the world.
and we were doing great. And
Yeah.
that's the conservative government for you, but that's another story. But I won't get
Yeah.
into that.
It was, yeah, it was a difference in the way we run our banking system and the way we
Yeah,
run our lending.
mm.
yeah.
So does anybody else have any other questions before we wrap it up? Because we are running 20 to 10. Okay, what I will do is I will put back up the contact information for Cameron and Mataya so that you guys can make sure you have it. I'll also be like saving this as a video, so you guys will have access to be able to replay it. Does anybody have any final questions before we cut out for the night?
Thanks very much. That was very interesting.
Well, thank you very much, Mataya and Cameron. It was awesome having you on tonight. Great value, and definitely a good program for Canadians getting mortgages in the U.S.
Yeah, thank you very much for having me.
Okay,
Well,
great to meet you all. Thanks for
have,
the
have a
opportunity.
good evening,
Thank you,
guys.
everybody. It was great.
Bye.
Thanks, Rob, and
Take
thanks
care.
for
Take care.
speakers. It was awesome. Thank you.
Thank you.
And
Have a
Have a
great
great
time,
night.
guys. And I'm stopping the recording.
Cheers.